Good morning, everyone. This is Marshall Gittler bringing you the morning comment for Wednesday, June 25th. Yesterday's comment was entitled, "A Pause in Iraq?" The answer to that question came quickly, and the answer is no. There's no pause at all. The Syrian Air Force bombed an Iraqi city in a strike against the insurgent forces. The news derailed a rally in the U.S. equity market and caused oil to spike back up. The dollar's oil betas that we published yesterday turned out to be a mixed guide to the reaction in the FX market. The Russian ruble was indeed the biggest gainer, as the betas had predicted, although that may have had more to do with the news of a ceasefire in Ukraine than with the oil market. On the other side of the trade, the Hungarian forint and the Turkish lira did indeed decline, but that may have been due more to the interest rate cuts in those two countries than to the rebound in oil prices. So we see that while the betas may be a good guide to general movements over time, they can't be expected to provide a certain guide for daily movements. It was notable, too, that WTI rose more than Brent did yesterday. A good part of the rise in WTI may have been due to a story that ran in the Wall Street Journal saying that the U.S. government is likely to relax further the restrictions on exporting some kinds of ultralight oil that have been processed in certain ways. Almost all exports of oil from the U.S. are banned, but exports of products can be exported, and there's growing pressure for these restrictions to be relaxed as U.S. oil production rises because of fracking. That would help to lift the price of WTI closer to Brent. I'd suggest that investors who are looking for volatility in these very quiet markets look at the oil markets, which may see more movement nowadays because of Iraq. Volatility elsewhere remains extremely low. The old VIX index, the VIX index based on the S&P 100, which has a history going back to 1986, hit a record low yesterday. Among the G10 currencies, the biggest mover over the last 24 hours was the Australian dollar, which fell sharply after the Australian government's Bureau of Resources and Energy Economics cut its price estimate for iron ore for this year. I expect falling commodity prices to continue to depress Australia's terms of trade and to weaken the currency further. For today, we don't have any significant indicators out during the European day. From the U.S., we've got the third estimate of GDP for the first quarter, which is expected to be revised down further. Durable goods orders for May are also expected to slow from April's pace. Overall, these figures aren't so good. The dollar could weaken slightly if they come in as expected. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.